Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and it has the 15th of June, 2023. Right, everyone, let's get into it. So, some more, SEC-related drama or regulatory-related drama over the last 24 hours. I thought that I was done with this for a little while here, but this was too juicy not to bring up on the Refuel. So, I'm sure you guys saw this on Twitter today, but there was I think it was the CEO or one of the founders of a crypto exchange called Prometheum that gave a kind of speech or kind of like presented at some hearing with Congress members or Senate members or politicians in the US. I don't remember exactly what the hearing was, but essentially there is this thread here from Matt Walsh that breaks this all down, and I want to run through this just to show you how silly this whole thing is. So Matt starts off this tweet thread by saying, "This Prometheum storyline has got to be the strangest thing I have seen in a while in this industry, because has anyone ever looked into this, it is beyond bizarre." So he says, "Last month, in the midst of the SEC bringing cases on Coinbase and Gemini and giving the stiff arm to Robinhood and others, Prometheum gets approved for a first-of-its-kind special purpose broker-dealer, or SPBD, for digital asset securities. Then Prometheum's CEO somehow gets a seat in front of Congress yesterday," and this was the hearing that I was talking about, and starts reading off pre-written notes, clearly coordinating narratives with Democratic members of Congress or the SEC. And then you can see here that there was one of the Congress people, Representative, what was his name, Mike Flood here, pushed back in this video against Prometheum CEO and basically said, "Why did you get a license and no one else did?" Basically, right? And why aren't you trading the assets that you're allowed to be trading on your platform here? And then also the Promethean guys, Matt says here, the Promethean guys want us to believe that all L1s are securities and will need to come and trade on Prometheum. Not happening, but enter Prometheum chain. So they have their own chain as well. So Prometheum has its own layer 1 blockchain, which is just bizarre. And then they're doing a token as well, obviously. And then there was also kind of speculation here or some evidence here that Prometheum is funded by a China Communist Party affiliate called Wangxiang. I don't know how to say that. My pronunciation of Chinese words is absolutely terrible. But there was that, and they also raised about $50 million, and they in their early rounds they had an investment bank to raise capital, and then it just continues here. Matt continues. The people running Prometheum all seem to be related. There's Martin Kaplan, Aaron Kaplan, and Benjamin Kaplan. I'm assuming Martin is the father of Aaron and Benjamin, just based on the way that they look here. Martin obviously looks older than Aaron and Benjamin, which look like brothers here. And they also look a lot like these guys that are apparently attorneys, which is it's just getting strange, right? So apparently the SEC, from all this evidence and the Dems, seem to be using this Prometheum exchange and these people as evidence that exchanges like Coinbase and Kraken and all that are actually able to go in and be compliant with the SEC. They just don't want to do that or just refuse to do so. So it seems like I don't want to say that this is the case like 100% or is this is the actual case here, but it seems like based on the evidence that either the SEC or the Democrats have found this Prometheum thing and basically paraded it in front of Congress or in front of the Senate here Congress, to basically prove their points that they've been going on about how the rules are clear for crypto exchanges to come in and be in compliance. They're trying to paint this narrative that the actual exchanges like Coinbase and Binance US and Kraken and all that don't want to come in and comply because they enjoy being kind of like outside of the law sort of thing, which is not the case at all, as we can see from all this evidence. So this again just speaks to what I've been saying about the SEC generally, in that it feels like they're very desperate right now. It feels like both the SEC and Democrats have waged this war against crypto that has backfired on them, because this has now become a huge political issue in the US, a huge partisan issue in the US, where the Republicans are pushing back hard on the Democrats and the SEC here, basically saying that they're saying stuff that isn't true. They're basically running a circus, and the SEC is basically being run like a circus right now. So it's just been funny to see that evolution happen kind of in real time here, and it's crazy that crypto has become such a big issue now here. Now, in terms of what this can actually translate to materially, I think, as I've been saying, the SEC is going to be stuck in court with both Coinbase and Binance for quite a while. I don't think they're going to win their case against Coinbase. Against Binance, it's different because they've actually pursued them for different things than just trading unregistered securities. I do think that this is going to backfire on the Democrats generally. I think that while single issue voters do exist, I don't think that's the voters that Democrats should be concerned about. It's more about the independents that usually, either the Democrats or Republicans hope to win in presidential elections, and this might be an issue that affects them. And not just because they're in crypto or they like crypto, but more about the fact that they're trying to weaponize an institution like the SEC to do their bidding without having to pass legislation or anything like that, which obviously is not something that should be going on and not something that people want to see. But anyway, you can read Matt Walsh's full thread here for an explanation about all of this. It just gets weirder and weirder, and the fact that they're doing this, as I said, it just reeks of desperation to me. So I'll link this thread in the YouTube description below for you to check out. And last thing on the regulatory front was Paul Grewal doing another Twitter thread here saying, yesterday we filed a comment letter on the SEC's proposed rule that seeks to expand the definition of exchanges to include DEXs. TLDR, this proposal should not be adopted and certainly not before completing the threshold steps for any rulemaking. So this kind of thing has been going on for quite a while, where the SEC has tried to expand this exchange definition to include decentralized exchanges. And I've highlighted before how this would become unworkable because some of the guidelines would, or some of the, requirements would be that the decentralized exchanges themselves would have to do like tax reporting and would have to do AML and KYC stuff. It doesn't work, right? Obviously, it doesn't work. For anyone who knows how DeFi works and how decentralized exchanges work, this is not a workable solution in any kind of capacity. But obviously, this is just continuing in with their theme of them trying to wage a war on crypto, trying to regulate it through these kind of like enforcement actions with the SEC, and it's a mess, right? So you can read Paul Grewal's thread on that. I'll link it in the YouTube description below. But really, guys, it's kind of funny. I've been saying that I think that it's not a bad thing that the SEC is doing this in terms of going after Coinbase and Binance. I think it's actually positive because, as I said, it's going to lead to more clarity. I think that they've backed themselves into a corner now. I think they've bitten off more than they can chew. They're going to obviously keep presenting it as if they're winning against crypto or the bad guys, or if they're doing good and they're protecting investors, but they're not. We all know they're not. We all see through their bullshit. And this is where the internet really shines, actually, because you have citizen journalists like Matt Walsh here basically exposing all of this bullshit to a wide audience on Twitter, whereas normally, before the internet, you would have to get the reach that the internet gives you, you would have had to go on some kind of like mainstream media publication, or you'd have to go on to mainstream news networks, and you'd have to get their approval to say these sorts of stuff. So this is where the internet really shines. I know there's a lot of negative aspects to this, the internet, social media, fake news, all that sorts of stuff. But really, when it comes to investigative journalism and exposing this sorts of stuff and getting the message out there to potentially millions, tens of millions of people, the internet and social media really shines here. So I'm glad that we have these tools, because it means that we can keep fighting and keep pushing back, and not all hope is lost here. Anyway, we'll link this thread in the YouTube description below. You can check it out for yourself. All right, so the deadline for the Ethereum Protocol Fellowship has been extended to June 18th. So you have a few more days here to put your, application in. I'll link this in the YouTube description below for you to do so. But I've talked about this before, so I'm not going to rehash it here. But essentially, if you want to become an Ethereum Core Protocol developer or researcher, or get involved with that process at all, this is the best way to do that, through the fellowship, which is run by the Ethereum Foundation. So you can go apply here, as I said before, June 18th, and then you may or may not be chosen to become part of the fellowship. But if you are chosen, I couldn't think of a better way to basically get exposed to everything Ethereum core development and research, and potentially become a core dev or researcher yourself. All right, the Ethereum on ARM account has shared that they're running an Ethereum archive node, running the Aragon client, on a less than $500 ARM board using 10 watts of power. This is crazy. So the board is a ROC 5B board, of course. There is a 4 terabyte crucial SSD. There is a case, obviously power supply, and micro SD card, for a total cost of $462. Now, As I said, this is running Aragon for the archive node, for the execution layer side of things. The database size is 2.3 terabytes. Sync time was around 3 weeks, and they're using the Lighthouse consensus layer client. Now, of course, that sync time there is quite long, but that's what you can kind of expect from an archive node. At least the archive nodes that exist today, they are very heavy nodes. They're not required to run if you're doing like solo staking or staking with Rocket Pool, because an Ethereum full node is different to an Ethereum archive node. And for those of you who don't know, the clearest way to explain the difference between an archive node and a full node is that an archive node basically has all of the information readily available to you. So, or I guess like all of the stateful information readily available to you. So how does this translate into an easy to understand example? Well, basically, let's say you wanted to know the Ethereum or the ETH balance of an address at block number such and such 5 years ago. To query that on your own, not to go on Etherscan, to query that on your own, you would have to query an archive node for that data, because a full node will not give you that data. A full node will give you the current state of the network. So a full node will basically return the value of the current block, and basically what the ETH balance is at the current block at that address. It won't give you the ETH balance at block 5 years ago, because it's not keeping all that data stored. It's basically pruning all of that and getting rid of that to keep the state requirements, I guess the storage requirements for the state low. So archive nodes are obviously useful for things like Etherscan and Infura and Alchemy and those kind of things, and the Graph and stuff like that offer these services for querying. So essentially, you as a regular user don't have to run an archive node. You run a full node that gives you the full state of the chain. You get the same guarantees as an archive node. You just don't have access to that historical data, which you don't need access to because of the fact that you have the current state. You basically have the chain, right? You have the chain, and an archive node can be created from a full node as well. It just basically has to run through and compute all the states and basically store that on disk so that you can access that information. But yeah, just quickly going back to the actual tweet itself, it's very cool to see that this is running on such a low powered device, because normally people would say that for an archive node you needed a more powerful device, but it doesn't seem so. And yes, the sync time is quite lengthy here at 3 weeks, but hey, being able to run an archive node on a less than $500 kind of setup is pretty groundbreaking. And I've highlighted before about how Aragon actually has a pretty lengthy roadmap for getting archive node sync times down, costs down, storage requirements down. So we're going to see that obviously play out over time as well, and see archive nodes get more efficient. But great to see this, and congrats to the Ethereum on ARM team for getting this running on a ROC 5B board. All right, so a huge bit of news today that I didn't see really talked about on crypto Twitter, because crypto Twitter seems to be way too concerned with just absolute crap lately, and I'm going to talk more about that at the end of the episode. But what went live today was EigenLayer. So EigenLayer is actually live on the Ethereum mainnet right now. They are live in what they're calling their stage 1 capacity, and they also have a TVL cap. Now, this TVL cap is very small. It has already been reached. I believe it was 3,200 ETH per LST here, and they're currently supporting ST-ETH, R-ETH, and CB-ETH. And those limits were already reached before I even got a chance to participate, because I woke up and it was already those limits had already been reached. So you can go to app.eigenlayer.xyz and you can connect your wallet, and then you can actually see the current state here. So you can see that each of these LSTs has reached their TVL cap, which I believe is around $16 million at current prices or something like that. So it's not too big of a cap right now, but still really, really awesome to see that this is finally live. I mean, I say finally, but it actually went live much faster than I thought it did, and it seems people are very, very hungry for restaking. I really do think that restaking is going to be one of the next big narratives that is going to fuel probably the next demand cycle for crypto. And this is another thing that's maybe a little bit orthogonal to the subject here, but just on that note of a demand cycle, I think that there's obviously the terminology of a bull market, right? But then I think a bull market really doesn't describe what we see in crypto, which is a demand cycle where demand for these things just spikes. And it's not just new money coming in. It's people with the existing assets that they've been holding, using them for different things. So they're basically bring all this new demand in. And the last bull cycle was actually kicked off by a demand cycle that happened with DeFi Summer, because DeFi Summer was mostly the existing money in crypto just being used for something new, innovative, and exciting, and it wasn't really new money coming in. The new money came later. So I think that we're going to have another demand cycle that leads to a bull cycle with something like a mixture of maybe like L2s and staking generally for Ethereum, with restaking obviously playing a part in that. And I've talked about how I believe this L2 summer could potentially happen next year, like a real L2 summer. But really, all you need for a bull market to really come back is that demand cycle from the existing user base. And I think for that to happen, you just need something new and exciting. And as I said, that was DeFi summer in 2020, and I think it really is going to be like layer 2s and ETH staking in 2024, probably at this stage. I don't think anything interesting is going to happen this year. I've been saying it for a while. I think this year is just going to be very quiet, sideways price action, range bound. Nothing too exciting, but it seems like a lot of the groundwork is being laid in ETH staking land, with different LSTs getting very popular, restaking, and L2s, 48, 44, different L2s going live, ZKVMs and L2 costs coming down. The infrastructure is being laid out. Everything's being done, and I think that we're going to get a really, really cool demand cycle relatively soon. But anyway, back onto the topic of EigenLayer. You can check out this blog post for full details of their guarded launch, this stage 1 launch, protocol security, and governance, which I'll link in the YouTube description below. And then you can also see that they currently have a community multisig that has a bunch of members on it, well-known people in the crypto ecosystem here, which you can check out as well. But I'll link this in the YouTube description for you to do so. But yeah, not much else to say really, because if you wanted to get involved right now, unless you've already gotten involved, you can't, because the cap has been reached. I'm going to assume that they're going to lift the cap at some point in the near future, but it's great to see that they're doing a guarded launch. It means they care about security. And I've talked about this before with regards to really any protocol that launches. They should all be doing guarded launches, because a new smart contract, obviously, or a new set of smart contracts, obviously comes with it a set of risks, not just code risks or bug risks, but also economic risks, things that may not have been accounted for. When you put something live in like a real mainnet capacity, there are different considerations. It's really out there for anyone to do whatever they want on there, and it's a very hostile environment compared to something like a test net or an internal kind of testing environment. So yeah, just keep that in mind. But as I said, the TVL cap has been reached for now, so you aren't able to get in even if you wanted to. All right, so Connext has an announcement here today that they have raised or closed a $7.5 million strategic fundraising round on a $250 million valuation. This brings the total capital raised by Connext Labs to $23.2 million. So just congrats to Connext, obviously, for this raise here. And you guys know what Connext is. I've talked about them before. They are basically an interoperability protocol, a bridging protocol for connecting different L2s and different chains together. They've been around for quite a while now. I should disclose that I am an investor in them, of course, have been for quite a while now, but I am definitely super excited about Connext, because Connext isn't just making like a bridge or like a cross L2 liquidity protocol. What they're trying to make and what they're really kind of honing in on is this concept of cross-chain apps or cross L2 apps. And what I mean by this is basically there is obviously a lot of concern around fragmenting the liquidity and fragmenting the user base across various different chains and L2s within the crypto ecosystem. So how do we actually solve for that? Well, we solve for that with bridges, obviously, is one solution. We solve for that by just generally growing the ecosystem so big that any one kind of small person doesn't actually care too much about, which layer 2 they're on. Everything's there for them. It's all well and good. But also building like native cross-chain applications. So you can imagine a cross-chain application that sits in the middle of different L2s, and someone could interact with Optimism even if they're on Arbitrum, or someone can interact with a ZKVM even if they're on one of the optimistic rollups, right? So being able to have like a seamless abstracted experience and a seamless cross-chain, cross-L2 experience between these different kind of liquidity pools and user pools is exactly what Connext is trying to build towards. And I think they're going to have more information coming out about that, as time goes on here, because that's what I what they seem to be leaning into, which has been great to see. And there's nothing wrong with bridges. I mean, I discussed bridges yesterday, so I'm not going to rehash what I talked about yesterday, but there's nothing wrong with just bridging protocols, right? The normal bridging protocols. But if we want to get to the next level, we need to go beyond that. We need to build proper cross L2, cross-chain apps that can all talk to each other. So it's basically a unified liquidity pool without sacrificing decentralization and security, with with these platforms being economically sustainable and preserving that expressiveness that we're all used to within the Ethereum ecosystem. But yeah, anyway, congrats to Connects again on this raise. You can check it out, the details about this, in the Twitter thread, which I'll link in the YouTube description below. All right, speaking of L2s, Chris here from the L2 Beat team has put together a thread where he says, what does scaling a blockchain actually mean? Do rollups and L2s really scale Ethereum? If so, where does this superpower emerge from? Buckle up, it's time to demystify these secrets. So this is a great thread. It's not too long. It's pretty high level, but basically it explains why we can't just scale the L1 while being able to keep decentralization and security alive. And this graphic here, actually, this triangle, this blockchain trilemma graphic, does a really great job of highlighting exactly what we mean by this. So essentially, Ethereum sits on the security and decentralization spokes of this triangle, edges of this triangle, I should say. It doesn't sit at the top because you can only have two of three, and at the top you have scalability. So in order to preserve this security and decentralization of Ethereum L1, it's not going to be a very scalable layer. Now, where we get scalability is from these different L2 networks. Now, they may not be as as secure or as decentralized as Ethereum L1 itself, but what they do get to do is inherit that decentralization and security, and also gain scalability. So they sit on the obviously different sides of the triangle here. Now, it depends on what L2 you're talking about, because you can have like a roll-up that has no admin keys, and it's not centralized at all, has no governance, has nothing. You're really just like a pure roll-up public good that exists on Ethereum, that has a decentralized set of sequences, decentralized set of validators, and you could even say it's an enshrined rollup or something like that, where it gains that scalability but also retains that security and decentralization. And that's where you get the kind of best of all worlds. But there's always trade-offs here. Most rollups are never going to be as secure as Ethereum L1 because they have extra smart contract logic that has been put on top of them, or I guess like built around them, than Ethereum L1 doesn't have, right? Just by virtue of them having like bridge contracts and things like that. But that doesn't mean that they can't be secure. It's just that Ethereum L1 is the gold standard. And why is it the gold standard? Because it hasn't actually sacrificed decentralization and security for scalability, right? It made that trade-off because we want people to be able to run an Ethereum full node on consumer hardware, on Rock5B boards, things like that. We want Ethereum L1 to be stable and secure and resilient. And to do that, you need to sacrifice scalability. So we've pushed scalability up the stack to the L2s, as you guys all know, and then we've given birth to this kind of modularization of the I should say, of the Ethereum stack, which I've talked about a bunch, so I'm not going to rehash it on the refuel again, but you can check out Chris's tweet thread in the YouTube description below. I'll link it there for you. All right, last up here was just a tweet that I put out today that I wanted to expand a little bit on. Now, I know the markets have been shitty recently, not just the quote-unquote altcoins, but ETH and BTC as well. And again, this just talks to what I've been saying for quite a while now, that the markets are going to be boring for a while. It's not going to be anything to write home about. I've said before that there is a defined range for ETH between like 1,000 and 2,500, where basically all price action between that kind of like price range is noise. And if we get above it and we stay above it for a while, above that 2,500 mark, you could say that we're probably entering a new bull market. If we go below 1,000 and don't come back above it, you probably start worrying, because like obviously the bottom was 880 for ETH. If we stay too far below that, you kind of start to worry. You're kind of like, okay, well, no one's coming in to bid here. No one wants to buy this bottom. So that means that are we going to set a new bottom, or what's going to happen here? We're just going to keep bleeding. So as long as it sits between 1,000 and 2,500, which admittedly I know is a big range, I think it's okay, because I mean in 2019 we sat between $100 and $360. That's an even bigger range. So really, I'm not too worried about any of the stuff there. But I'm also not worried because there's just so much going on in Ethereum right now to be bullish about, that I can't really look at the price of ETH and cry about it. Like I don't really care. It's short-term movements. And that's why I put out this tweet today where I basically said, I vividly remember when ETH went to $80 in 2018 after an absolutely brutal year of non-stop nuking. So ETH went down 94% in 2019. There were big players shorting that bottom. Everyone was max bearish and believed that it really was over. And if you were throwing in a bid, it basically felt like a Hail Mary. Then ETH did actually bottom at $80 and the crypto market went through a painful time-based capitulation phase, which lasted until the second half of 2020. The point here is that hardly anyone is bullish at the bottom. Even the most ardent bulls will feel fear and question everything they thought to be true, but they won't tell you this. If you're a long-term investor who's in it for the tech, then day-to-day market movements shouldn't bother you. After all, ETH went from $100 to $4,900, which is a 49x in just 18 months, from the March 2020 COVID nuke to the market top in November 2021. Things can change very quickly. So I want to hit home about this point where I said that even the most ardent bulls will not tell you when they are bearish. And there is a meme, obviously, about me where I say I woke up bullish, GM. I am bullish most of the time, but there are certain points in time where certain price movements kind of defy logic and make me even bearish. And one of those was ETH's price movement last year, or when ETH went to, they had like 12 in a row red weekly candles, and ETH went to like 880. And, that was below the old all-time high. And obviously BTC went below its old all-time high as well, which hadn't happened in its entire history. And for me, I looked at that and I'm just like, I had like it was short-lived, but I was like, this is pretty crazy. We've kind of like broken precedents here. Why did we go down so fast? Like, this is actually insane to me. Like, Ethereum has so much going on. We did so much during the bear market and so much during the bull market to increase Ethereum adoption. Why is ETH just going down like this? And at the time, obviously, I didn't know the real reason. And the real reason later came out that everyone was so leveraged that they just got completely wrecked. 3RS Capital, obviously the Terra collapse, a lot of these other funds, also SBF came later. But at the time, no one knew that. So at the time, everyone was looking at this price action, like literally 3 months worth of just down only, like no relief. And they were like, what the hell is going on right now? Was this all just a fake pump? Did we not create any value here? Is everything just like a fugazi, basically? And it wasn't just me saying this. There were a few of my really bullish friends that were thinking the same. We were all just very confused. But that was very short-lived because we bounced up from there. And then I was like, wow, okay, this is starting to feel a lot like what it did in December 2018 when ETH went to $80. And of course, I bought ETH there as well. It was actually very hard to buy at that point. Like, I bought a lot of ETH under $1,000. I just threw a bid in. It really felt like a Hail Mary at the time. Like, you know what? I'm either going to be like a genius for this buy in a few years, or I'm going to regret the shit out of it. I'm going to lose a lot of money here. But I don't think I'm a genius yet. It's like, what, 2 times off the bottom, and it went a bit higher than that. But for me, like, you guys know, I don't plan to sell my ETH. I'm just staking it and kind of like stacking through those means. But at the time, it felt exactly like I felt in December of 2018. But I only realized that, maybe, a few weeks later, when the dust had settled, it started coming out like exactly why we were nuking. We found out that it was 3AC just, puking all of their ST-ETH, which for ETH, and then obviously ST-ETH lost its kind of like, I guess, quote unquote peg, and then they were selling that ETH, and then obviously, FTX was having troubles, but we didn't know that till later. And then Terra collapsed, all that sorts of stuff. But yeah, I still had that fear. Even though I'm very experienced in these markets now, I still had that. And honestly, I don't think most people are going to tell you that. Most of the ardent bulls, the ones who are bullish all the time, are not going to tell you that. And I think this is maybe the first time I've ever really said that on the refuel. I've spoken to friends about this, like very close crypto friends about this. But generally, when you're a perma bull like I am, you don't really want to admit that you were bearish at some point. And at the same time, it wasn't really bearish because you were bearish on I was bearish on the tech or bearish on Ethereum itself or anything like that. It was more that I was just confused. I was like, why is this happening? This is just a crazy price movement here. But then since then, I've been thinking a lot more about basically the fact that the bear and bull markets are exactly the same in terms of the emotions and the human kind of like stuff that goes on. Because when you really think about it, if you just flip the chart upside down in a bull market, it looks like it does in a bear market. And if you flip the bear market chart upside down, it looks like it does in a bull market. at the end of the day, the different price movements in either direction are the same thing. Like in bull or bear markets, you have the same emotions just in reverse. So you have like max fear at the bottom, you have max greed at the top, right? And you have people kind of like latching on to all these bearish narratives at the bottom. Like right now, it's all the bearish narratives, or I mean, for a while now, it's been the bearish narratives around macro and around regulation and around the recession stuff and inflation, all that sorts of stuff. But these are just convenient narratives, because in the bull market, we had our own narratives. We had the super cycle, right? We had the fact that the cycles are over generally. We had the fact that we have created a new paradigm here. We've created an infinite money printing machine, or that we're acting as an inflation hedge, and that's all well and good. So there's different narratives for bull and bear markets, but they sit on the same kind of spectrum. It's just on opposite ends of the spectrum, but they're the same thing ultimately. So that's how I've been looking at markets, at least since the last bottom. So for quite a while now, that's how I've been looking at these things, where it's like, okay, these things really play out the same way. They're just on different ends of the spectrum. And then my buying and selling is dictated by that. I sell when I think things are getting too stupid and narratives are getting dumb on the bull side of things. And then I tend to buy when I think narratives are getting dumb on the bear side of things and things are getting stupid. And I've been saying for a while that I don't think crypto cares at all about the macro environment. I think it's been doing its own thing during this kind of bear market, as it's always done. And I think that there's no further proof of that than the fact that the Fed paused rate hikes today, or said they were pausing today, and the crypto market nuked. You need to understand that a lot of this stuff gets priced in ahead of time. If knowledge is available to people, right? If it is widely disseminated and people are so focused on it, it gets priced in. Not everything, but a lot of it gets priced in. And the way it gets priced in is different for every kind of like asset. It's different for every piece of news, but it does. And again, going back to what I was saying about no one caring about the macro stuff, like that's because it got priced in ages ago, and also because crypto tends to do its own thing. And the last thing I want to bring up here as well that I think is critically important, because I'm seeing a lot of people talk about this right now. Everyone's talking about, I can't remember if I mentioned this yesterday, but I'm going to mention it now just in case very quickly. Everyone's talking about stocks being at all-time highs again. If you go back and look at the chart, stocks were at all-time high for all of the second half of 2019 and most of 2020, bar the COVID dump, right? While ETH and BTC was still range bound. ETH didn't actually get out of the its range, right? That $300 or $100 to $360 range until near the end of 2020, right? And that was after DeFi summer. That was after all the insanity and everything like that. And BTC as well, right? BTC did it a bit sooner, but still. So don't look at stocks going all-time highs and be bearish on crypto because of that. Crypto does its own thing. It's still its own asset class. There are certain correlations here and there, but over longer periods of time, crypto seems to have its own like 4-year cycle that it wants to follow, and that's kind of like what I've been following for quite a while now, what I've been focused on. And until that breaks, I think, don't fight the cycle sort of thing there. But anyway, enough of my rambling and ranting for today. That's going to be it. So thank everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.